Well, performance sports shares have been on a downward spiral this year, dropping more than 80%. It appears the dark clouds have been sitting above the troubled company, possibly could be clearing. Earlier today, the shares rose nearly 16% on news that Brookfield Asset Management is weighing a bid for the maker of Bauer and Easton sports gear. So does Canada's largest alternative asset manager have what it takes to turn performance sports around? Joining us with his reaction to today's news is Graham Roustan. He is founder of Roustan Capital. He's also former chairman of Performance Sports, and he has also expressed interest in the past in taking over the company. So good to have you here. First of all, your reaction to perhaps Brookfield Asset Management. They've built a position in this company through equity. Might they buy it? What do you think?
I don't know. I don't have any communication with Brookfield, but it's not surprising. There's a lot of very good institutional owners out there that see tremendous value in the Bauer brand. Right. So it's not surprising whatsoever. I mean, this is Bauer after all, and Easton and other brands, but it doesn't surprise me that they're interested in the brand for sure.
Are you interested in making a bid to buy this company?
You know, as I've said for the past year, I'm ready, willing, and able to get back into the company and put it back on its original track. And I'm just waiting for that opportunity.
As the owner, or?
Yes, it would be as an owner and chairman once again, yes.
So potentially we could see both you and maybe Brookfield Asset Management taking a run at the company.
Yeah, and I think others will too as well. I think that if and when there's an opportunity, and nobody knows that, we're all waiting on the company to make an announcement of some sort and to let us know what's going on in the future. But if that opportunity comes, I'm sure, well, I will be there. I'll be first in line, and there'll be others there.
I remember that one of your original frustrations that management at the company has enacted is that they were opening their own stores, which was messing with the relationship, in your view, with its sports equipment, with its sports clients, the sports maker clients. So even the Canadian Tires of the world, the Performance Sports Group would have stores to compete with the companies they already sell with. You thought that was a real failing? Oh,
I think it was a total failure, and I think the proof is that the stores are losing money, and they're a horrible drain on cash. Every store they open apparently costs $4 million to open, so they're sinking $4 million apparently into
How many
each store.
stores have they opened?
Well, right now they've got 2 open. They just announced the first Canadian opening next summer in Vaughan. And I still hope that the company changes its plan and doesn't open that store, but they may. But I also believe that the company will most likely, hopefully, stop opening stores.
Who else do you have on a team that could help you go at this company? Who else are you talking to? Because, of course, you used to be in charge from the board level. You certainly know many people that have surrounded this company. Yeah, well,
I'm not going to get into names, but the top private equity firms in North America have all reached out to me, and I've met with private equity firms, pension companies, everybody. You know, it's sort of a natural for me to come back. Brookfield, no, and like I stated, Brookfield has a position in the company, and I tend to stay away from meeting with any current shareholder.
Right. Okay.
Yeah.
Is there? We've seen the stock rally right now. Just in terms of value of the company, where do you see sort of fair value of this company trading in the markets?
Well, that's a great question, and you know, based on current share price, people are saying that the enterprise value of this company is approximately $600–700 million, somewhere in that range, US dollars. The problem is it's hard to come up with a valuation. The company has not released any audited financial statements. So, you know, I don't know how much debt is on the company. So even when I say the enterprise value, I'm using a $450 million debt number, but we have no knowledge of what the current debt is because they haven't come up with any audited financial statements, and we don't know what the EBITDA is. So without an EBITDA number, you really can't put a multiple to it. But if you pull, let's say $30 million of EBITDA, let's just use that number, and if you use a $700 million valuation, if you want to use that number, you know, you're talking about a 25 times EBITDA valuation, which I bought it from myself with a group. I led a group to buy it from Nike for 7.5 or 8 times EBITDA. So, you know, the valuation of this company is hard to come up with because the company has not released audited financial statements.
I mean, it's a different world in the world of brands as well. And there are different ways that they can be leveraged in today's retail. I mean, retail has completely upended itself to a certain extent. Where do you see some of the value that the brands could provide in today's environment?
Yeah, well, the problem is that this brand is sort of limited in ways to the participation rates. You know, if participation rates with Hockey Canada and USA Hockey increase by 3 or 4 or 5% a year, then
all
really
the girls are playing. It's only going to go up.
Well, you know, and I'm a bit, as you know, I'm a governor of the Canadian Women's Hockey League, and I support women's hockey. I write checks every year to support women's hockey. I love women's hockey, and I've been with the Canadian Women's Hockey League now for 10 years, and so it's a big, big thing for me.
It's a new market too.
It
right?
is, but it's, again, there's only so much ice time available out there in ice rinks. So, you know, if you're giving hours to women's hockey to support women's hockey, those are hours that boys aren't playing. So when you look at participation rates, you have to look at the, you know,
facilities.
You have to look at the facilities, because if, you know, name a city that's building ice rinks anymore. It used to be in the 60s and 70s and 80s, communities would build these indoor ice rinks. Well, you know, everybody's pulled back on these construction of these ice rinks, so it's limited. So the growth of the brands is limited to participation rates, which is limited to facilities.